Todd. Morning, Hank. Jim, hello.
Good morning, everybody.
Jody, David, LK, another Dave, Steven, Omar, Susan, Douglas, Donna, Gary, Jody, hello, hello, hello. Gordon, hello. Jimmy, hello. Samuel, Jim, lots of Jims, lots of Daves. We got good representation here. Hey, Keith, another Jimmy. That Kiana, or am I saying that right? Kiana or Kina? Michael, morning, Joshua. Hi, Sam.
Nate, do you want to give a quick update on the updates that have been pushed through overnight with the income machine?
You, you mean the income machine that got hammered yesterday in a
In a
way
good
that
way.
we never imagined, but was amazing to see? All
Yes.
right. So, and we'll talk about this. We're going to talk about it one more time at the end today, right?
Yes.
At the end of okay. So, if you guys stick around to the end of opening playbook and you have no idea what we're talking about when we talk about the income machine or how to get free access to it, we will cover that. But for those of you, which I know most of you already in there, just a quick update. Yesterday, I opened the income machine that I've been working on for the last 6 months for the first time. We had an insane response, by far the craziest webinar that I've ever been a part of. And we basically smashed the server. And the thing was, it's not just like 1,000 people were on the website because that's not really a big deal. It's that 1,000 people were running complex, HTTP post back and forth to CBOE servers and everything like that, times a million combinations of options. And so our developer said, "Yeah, we just melted the servers when everyone jumped on there." So overnight, I mean, we went to work right away, got a whole bunch of updates in there. The servers are stabilized. However, we're still working on a couple of the actual data feed things that needed updated. So you should be seeing a much faster, smoother operation this morning already, but still going to have some work over the next hour or hour and a half now that the market is open so that we can optimize the actual data feed. So for all of you who have no idea what I'm talking about, don't worry, we'll cover we'll cover that soon. But for those of you who are already in there, cranking out opportunities on the income machine, we are optimizing that on the actual real-time spread data in real time because we had to wait for the market open to do that piece of the equation.
And we'll maybe even test it out here in this class just to see
Yeah,
how it's running, see what we can do to.
well, we can do that. Graham, what do you think about Bitcoin just immediately coughing up
Uh,
all those gains? I
I was
really thought we might get another run there.
I had a signal, a momentum signal over the weekend, and those have been really good. They've been hitting with about 83% accuracy over the last 2 years of trading Bitcoin. But the last two of them have seemed like fake outs. We're getting that. I don't know if you guys remember last summer when we went to all-time highs and then we'd get right back up to them and then right back up to them. It's starting to feel like that again.
That's kind of what I was thinking. And then we eventually took a much deeper correction after a couple, three or four attempts before we made our rally. So I'm hoping we don't
Yep.
do that. I still am you know, cautiously optimistic that we'll get a little rep. But it's actually, speaking of the income machine, yesterday I posted about Bitcoin. I said, "Hey, Bitcoin's really ripping. I like the fact that we've got some momentum here, but I don't trust it enough to like take a directional momentum trade. I like some defensive trades where we can give it lots of room, and you know, good case in point today is it sells right back off.
Yeah. Yeah. I'm in a trade. I've got a couple open on Bitcoin.
Oh,
And every
same.
time, every
Unfortunately,
time it's starting to look really good, I'll be up a couple, 10, 20%. Like, all right, here we go. We're going for that whole 100%er. And then poof, a day like today. Did you see JP Morgan is looking like they're going to try and fast track a stable coin? I'm
no, but I
curious to see how that. My assumption always was that would be positive for Bitcoin and legitimize the crypto world.
yeah, I think it's a good debate. Morgan was at that conference overseas with a lot of like the big Bitcoin holders and developers, and he said in the past it was a lot about blockchain development. It was a lot about whether Solana or Ethereum or which one of these had better structures for building new cryptos. And he said this time it was all about the stable coins, all
Really?
about building and backing the stable coins, getting them set up for transactions. So I do think that is the new wave, but I really don't know if it's positive or negative. From a pure liquidity standpoint, you could say it'd be negative because there's going to be volume that moves into stable coins. But I've kind of fallen to the assumption that it's all good. Like as long as the more legitimate it becomes, the more people use it, then Bitcoin becomes more prevalent as the just risk on version of
Right.
that crypto world.
Or even the inflationary version, or the kind of like paper money, not paper, but metal gold,
Yeah,
digital currency, digital gold. I don't know. That's
yeah.
kind of my thought, but we'll see. We'll see what happens there. But yeah, getting flushed out 3% today. Markets are only down a third of a percent. Um, so we'll see what happens. We'll see what happens from here. But it does look like we're getting some strength. I've got a watch list of just what I call my active trades, the tickers I like to trade. And there's about 20, 25 tickers on that list. At the open, only two were positive. Now
Mm.
we have about eight, nine positive. So it does look like
Yeah.
the markets are trying to rebound a little bit here. All right, well, we'll get rolling here, guys. We do this show every day. I don't know if you're new or not. I know we had about 1,000 people join the Income Machine yesterday, the free trial that we did. We'll talk about that again today. If you guys missed that, free access to the Income Machine, we'll give you another shot at it today. But if you're new here, we do this show every single morning. 10 a.m. Nate and I get on here. We break down the markets, what's going on, what we're seeing coming, and we'll walk through some trades together. And we kind of have a rough template for each day. Tuesdays tend to be my market outlook day where I break down the internals, the sectors, the seasonality, and then give my prediction for the market as well as some trades. Wednesday, we like to have a guest on to kind of give us new insights. Thursday's typically a training day where we'll dive deep into a specific strategy and try and train you on how that strategy works, how to use it. And then the Mondays and Fridays are the weekend. Monday's weekend wrap up or weekend in review, and then the Fridays are weekly wrap up. So just to give you guys an idea, make sure you're joining every single day. We're doing the best we can to bring you guys the meat and potatoes every single morning at 10 a.m. for breakfast.
Yeah, and meat and potatoes for breakfast. And by the way, if you guys are not on the text list, we have a text list that sends you a reminder every morning. Because I know every day I hear from people, "Oh shoot, I missed opening playbook. I was distracted. I was trading, whatever." We do have that text list that just sends you a text right to your phone saying, "Hey, opening playbook is starting," and giving you a direct link to that. So. Let me know in the chat if anyone is not on the text list. If you didn't get hey, we're starting opening playbook today, I highly recommend that just because I don't think you want to miss any of these sessions. We've been getting some pretty good opportunities here. I don't want to pat ourselves on the back too hard, but we've been getting some pretty good opportunities over the last couple of weeks, and you don't want to miss any sessions. So if you're not on that list, let me see if I can find that link real quick.
And Nate, it's funny. I've been bragging for 5 or 6 weeks in a row about how we've nailed everything and been on the money. This week, I'm going to tell you guys that I missed it, and I still don't know why. I still don't know why it didn't happen the way I drew it up, but we'll walk through that today.
Awesome. All
All
right, I
right.
posted that link there in the chat. If anyone wants to jump on that SMS list, just click that, put your phone number in there, and then you'll be sure to get a text every morning when we kick off opening playbook and get all that good stuff Graham was just talking about.
Awesome. Well, we'll dive on in to the meat. This is the trades. This was a screenshot I took this morning. Pretty mixed bag across our opening trade. And again, we give you guys lots of trades. We don't track them. This isn't a paid service. We do this for free. We're just trying to tee you up with opportunities. With the markets opening lower today, I do think that these drop. Yeah, looks like four are up now and about six are down. So it is just a mixed bag market right now. Now they have time, they can grind higher, but across the board, pretty flat for the trades. And there's a good reason why I'll walk through it. For the Telegram of the week, in Telegram, I posted this about Progressive and AJG, but this screenshot was on Progressive. We were waiting here for this ascending triangle to hopefully break above 290 and trade that breakout. It broke out the bottom, so we weren't in a trade. It's okay. It all worked out, but now we are getting a bounce, it looks like, off the 200-day moving average. I'll walk through here in a minute why I think that that could really start humming along. As a bonus, and I wanted to include this again this week because I saw some people yesterday asking, I have the income machine. How can I track the trades I take? What I did here, and I'll show you real quick, is made a template trade tracker for you guys. So if you guys have been taking, if you're in any of our paid programs, we keep everything in a trade tracker. What you want to come here, or when you click here, just come to the file at the top left, make a copy, type in whatever you want to call it. and then make a copy. This is a view only uh, template. Otherwise, I'd have a million people coming in here and posting whatever. So make a copy of it, and then you can come down here, type in your different trades you take, entry, exit date, symbol, option. I'm just going to scribble in there. And then here, what's cool is I've got the formula set up. So let's say we entered on the 17th, closed on the 27th. It's going to automatically track your days held. And then let's say you type in your options here and you bought for $1, sold for $2. The percent change should automatically fill in. This also should automatically fill in. Now, this is based on a 5K stake, but you can just come here in the formula. Actually, let me do something cool. What if I do this? If you made a copy, I'm going to make it even better. What I'm going to do here now is make it so that you can adjust the starting stake. Or if you know how to use formulas, you can just come and put whatever you put in on it. So now if you come here, you can type in whatever you want. Say you'd like to do 1250. Should automatically adjust. Now I got to just adjust this guy. And we should be good. So this is here for you. All done, pre-filled with formulas, so you guys can use that. I know we had some questions on how to track trades, what's a good way to journal them, all sorts of jazz. Of course, that is in the, what's that?
I was going to say, and one cool thing, this is what I do if you guys want, make multiple copies. Make a copy for different strategies. So make a copy for your day trading strategy. Make a copy for your income strategy. Do an income machine separate one. Track all your income machine. And then you'll have all your data and your stats based on the individual strategy. That's the way I do it. It's a really good way to kind of calculate what you're doing. Because, it's funny. Even I do this because I trade a lot of different strategies. I want to have, a bunch of different things going at once. Sometimes I'll have a really good week and I'll actually have to do a little due diligence, flip through to see why I'm having a good week. Like, oh, what actually hit this week? Because I've got a lot of stuff going on, and having these individual trackers really help, kind of look at it and be able to objecting.
And instead of making a new copy for each one, just come down here to the bottom where it's a tab and just duplicate it. So then you can have one big trading book and you can say overnight options, weekend options, NVIDIA Elite, perfect income, and they'll all be here as a nice trading book for you.
A couple people still asking where to get this, guys. I'm going to post it in the chat again for you. All you want to do is load up this doc. This is just a Google Sheet. And then, like Graham said, just make a copy of it. Click File, make a copy, and then you've got it there. And yeah, you can be smarter than me and use tabs. That's probably a good idea.
We have to keep it separate. Otherwise, you guys would be able to see all of our trades, all the programs.
Yeah, I was going to say my situation's a little bit different. But anyway, great idea. Use the tabs.
Cool. All right, let's go ahead and dive into the morning market update. And things aren't too changed from this. They're up just slightly from this screenshot here, about 0.1%. But again, mixed market. The markets are slightly down today. Nothing to be crazy concerned about or worried about. The one that does stick out to me is Bitcoin, down 3% today, 2.8 now, with the markets barely down. It's not a usual pattern for Bitcoin. It did just get right back close to those all-time highs just yesterday. Again, my signals, my strategy I've been using with about an 80% win rate over the last 2 years did give me a new buy. So I was hoping, still am hoping that it'll go through those new highs. But for now, just a quick drop in Bitcoin. One other interesting thing to see is the VIX here. Now, this isn't a crazy change, but it is right around that 20 level again without a major down move in the market. So it's interesting to see volatility picking back up, options prices going up, even though the markets have been relatively flat over the last week or so. For economic news that we have coming up this week, tomorrow is a big day. We have the Fed interest rate decision at 2 p.m. See that right here? Fed interest rate decision. This is going to be very important for the markets, especially for small caps, bonds. So if you're trading tickers like IWM or TLT, they're going to be very volatile based on what the Fed has to say. Now, I think everybody, absolutely everybody's assuming the Fed is going to do no action on this decision. I think everyone's going to say they're going to keep rates the same and monitor inflation. What's going to be very interesting is what they say after that. If they start to hint at a July interest rate cut coming, I think we're going to see bonds and small caps really pick up steam really fast. If they do not hint at anything, if they say we still think that inflation's a big problem and we're going to just monitor it month to month, and they don't even hint at a future cut, I think we're going to see stocks sell off on the news. So that's tomorrow at 2 p.m. Eastern time. And the markets will be volatile probably through the rest of the day, but really that 2 to 3 p.m. period. So if you have any big positions on and you're worried about it, feel free to trim. If you want to just have some fun and maybe trade a zero DTE option, that can be fun too. Just use the SPY or QQQ, pick that day's expiration. You can even sometimes get two-way plays where you're going a call and a put. As long as the move is big enough, you can win. And that's what we got going down tomorrow. On Thursday, markets are closed. We won't be having opening playbook on Thursday. It's the Juneteenth holiday, which celebrates, I believe, the abolition of slavery. So the markets will be closed on Thursday. No opening playbook. Enjoy the day off. And then what makes this interesting that the holiday falls on a Thursday is we might see lighter trading volume on Friday, assuming that Wall Street says, hey, we have Thursday off, we have Saturday, Sunday off. Let me just take Friday off too. So it'll be a little bit of a short week for us, I think. But the big thing will happen tomorrow. For next week, looking ahead at the key economic reports, the big ones for me are the consumer confidence report, which will happen at 10 a.m. on Tuesday. So we'll be right here in this room next week, Tuesday. And this report's going to come out, and we're probably going to see the markets move a bit on it. And then also, we have GDP coming out on Thursday as well. And I looked into this one. There's like preliminary GDPs, there's just estimate GDPs. I think this one's the real deal GDP based on what I saw. There was some confusion there. I wanted to make sure I said it straight. Based on what I looked at this morning, it looked like the real deal GDP. For the charts of the week for you guys, the first one I'm going to show you here is the same one I showed you last week. Tesla, Elon and Trump had their feud on Twitter, going back and forth, or X. Sorry, not Twitter, X. Tesla dropped 22%. Intraday, it dropped 17%, or dropped 22% at the peaks, and then ended up 17% intraday. What normally happens to Tesla after a drop like that? Well, it's happened about 7 times in the past where Tesla has a drop of 17% or more, and 7 out of 7 times over the next 3 months, Tesla has gone higher. So you can see percent of the time it's been higher, 100% of the time over the next 3 months. Look at this. The average return in Tesla over the next 3 months is 70%. That's on the stock. We're not talking options. That's on the stock. So it's already recouped a good bit of that so far, but there's still room to run according to the data, according to the charts and what's happened previous times. And even if you're looking just like a month later, 2 months later, it's still very, very bullish for Tesla to buy that dip. Again, which we did see that gap get filled, but typically it keeps launching from there. So that's a fun one to look at if you're a big Tesla trader. This is another interesting chart that I came across this week. It shows the S&P 500 performance after a bear market low or near bear market low, which we just had that big drop back in March and April. Check this out. During the first 45 trading days following, which we just saw, the average return in the markets is 14%. We got 21%. And from there, let's look at what happens after the first 45 trading days. So about where we are right now. 1 month onward higher, 3 months onward higher, 6 months onward higher, 1 year onward higher. Look at this. Every single period on average has been higher. Now, not every single time did that happen, but if you're looking at this, about 80% of the time, the markets continue higher from there. So in my opinion, that tariff news is what shook us out, made everyone go crazy, sell stocks like at fifth fastest rate in 100 years. Well, now we're seeing that tariff news making less and less waves in the markets, good or bad. It's kind of taking the back seat. I think interest rates are going to start taking the front seat again. And typically the markets react positively over the next year following a big correction like that. Now, with that said, let's take a look at the institutional buying and selling and compare it to private client buying and selling. This is another interesting one to me because we did see during that March and April drop, all Wall Street was selling, selling, selling. They were net short. Meanwhile, retail was buying, 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 and all the media outlets were making fun of retail, saying, "Ha, suckers going in to buy the dip again, gonna get, end up with their head in their lap." Well, it ended up retail was right, Wall Street was wrong, and the markets went higher from there. But now you can see, just this last week, you can barely see it this sliver. this was when the news came out of Iran and Israel. Hedge funds started selling. Retail private clients kept buying. So it is interesting just to see that there is a divergence there right now. Not too much to go off on this, but it is interesting to see that they are diverging yet again. So for a market overview, last class, I told you this is where we were. We nailed it like 5, 6 weeks in a row on market direction. We were stuck at that 600 level on the SPY. And I said if we get a positive CPI, or if we get CPI that says inflation is cooling, I expect we're going to skip back to all-time highs. That was the exact words I used, skip. Like one of these numbers where you go boing, 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 or boing, boing, boing. We did open higher, but we faded from there. I also said if we were going to be higher than expected, I expect to move back down to the 200-day moving average. So we ended up having lower than expected inflation numbers. It was great. It was awesome. Markets opened higher, like I said. I was expecting a bam, bam, bam sort of 3-day action. Ended up getting a fade, and now we are just chopping around. So here's my big fat X to say that we did get it right for about 5 weeks in a row. Week number 6, we didn't get a move at all in either direction. So
We,
the
we can we can blame the wars for that though, right? I mean, that's reasonable.
that would be a cop out, I think. That because if you look at the day the CPI printed, we did open way higher, but that
Yeah.
day before any wars, we coughed up every single last penny of that gain. So
Yeah.
and this is one where I said at the beginning, I still don't know why the markets weren't more excited about this. This was a big, big deal for the economy, for inflation, but no move, really, no move.
Well, and I mean, maybe part of it is that the because we still knew the rate cut decision wasn't going to change.
Maybe.
That it wasn't there wasn't anything extra price in, even though theoretically the news is very positive.
Well, if you look at the July rate cut change, the number spiked. Now it's leaning towards a rate cut in July. So we'll see. We'll see what happens. Again, what the Fed says next week, Wednesday afternoon, is going to probably be the next market mover here. So where do we go from here? Well, if we look at the market internals of the fear and greed index, we have seen 3 weeks in a row. 3 weeks ago, it was 63 rating, leaning towards green. Last week, it was 62, and today it is still at 62. So no change week over week. Still, market internals are bullish. They are strong. I think we saw that just recently, even with the war breaking out in the Middle East. Immediately, the market sold off, but they've completely rebounded from there, and they're showing a lot of strength, in my opinion. If we're looking at the CPC, which tells us the call to put ratio, in other words, are options buyers more bullish or more bearish right now? Well, right now we're still in between that 0.75 and 1 reading, which to me is just a normal market condition, which is good. That's positive. That's healthy. We did see a spike in puts over the last few days with the war, but it didn't even break above that 1 number. 1 means that there's an even number of put buyers and call buyers, which typically tells us that's out of weight because the markets tend to go up. Call buyers should almost always be in control in a good, healthy market. So the fear really hasn't spiked as much as the news maybe made it seem there on the put to call ratio. So we'll just keep an eye open there, but there's no clear play, no clear indication as we are still in this range of 0.75 and zero point 0.1. It's when we get outside of those ranges where we have the extremities and a good buying or selling opportunity. For percentage of stocks above the 50-day moving average, and this one I found interesting. Again, the markets I just showed you, it's pretty much chopped around over the last week, going nowhere fast. The stock percentage of stocks trading above their 50-day moving average, however, dropped about 10 points. What this means to me is that while the markets are holding up, it's going to be those large cap stocks that are holding up best, and a lot of the other stocks haven't been keeping up. It's not a crazy drop, but about a 10% decline here week over week on the stocks trading above their 50-day moving average. That means a lot of stocks actually moved lower over the week, even while the S&P showed that the markets went sideways. It's just something to keep an eye on here. Just looking a little bit further out on the 200-day moving average, the percentage of stocks above the 200-day moving average, we did see a small decline there. Not a huge change. I think a lot of stocks that are above their 200-day moving average are well above it by now. But if you do look, since about the middle of May, we haven't seen an increase in this number. So the stock market, if we look here, since the middle of May, has been grinding higher. right? So you would assume that that number would be going up. More stocks would be coming up above their 200-day moving average. However, we have not seen that. We're about the same number that we were here May 12th. What this tells me, again, similarly speaking to this one, is it's that the large caps, the mega caps, I should say, are leading the charge. They are the ones dragging the markets up. I mean, we saw Nvidia go up almost a little over 50% from the lows in April. So it's those big stocks, Microsoft too, that is dragging and keeping this market up. It's not full participation across the market. So seasonally speaking, I've shown you this chart a few times. I'm going to break it down a bit further. Summer tends to be a bit choppy. June's flat, July's positive, August and September are negative. We take this as a sign to be more selective. Both of these charts are also assigned to be more selective. It's not like every single stock's going higher. Most stocks aren't participating. So again, we want to be selective, and let's see what this means if we break it down a little bit further. So I took this chart of the monthly average performance in the S&P, and then we broke it down to biweekly. And if we look here, the second half of June is still negative. It's second worst biweekly period in the markets all year, historically, seasonally speaking, and it does line up with our presidential seasonality as well. However, this is something to be excited about. Obviously, we are in the back half of June, but we're going to be quickly closing in on July. What is the first half of July? It's seasonally the strongest period for stocks. So yes, while we are cooling off now, and while I think now that we might get a little bit further of a cool off, I don't want you to think that this is about to send us down to the next big correction or bear market. I do think we are going to return to strength and see all-time highs. First half of July, the strongest period for stocks in the market. Second half of July, also a very strong period, a very positive period for stocks as well. And if we look at the presidential seasonality, this all lines up. Back half of June, typically lower on both accounts. This green line tells us the presidential seasonality of all election cycles, or first year of the new term. This red line is first year of a new term of a new president. So this is more accurate to what we're trading now. But again, second half of June, negative, and then July goes positive on both accounts. So if you look here, obviously a little bit more rockiness down here on the red line, which is that new president in the seat, but both end up positive for July. So we do want to be selective now. We do want to be smart about our trades, but I think July we're going to see that open up. I think we are going to see all-time highs here soon. Now I wrote in here for the last 5 or 6 weeks that I'm expecting all-time highs in June. I've gone ahead and crossed that out, not because it's definitely not going to happen, but it just doesn't look like we're going to get there now. When I gave this analysis, it was based on the markets recovering, the tariff news starting to take the backseat, and then CPI really sparking us, which it didn't. So, barring all news here, if the Fed cuts interest rates on Wednesday, which I don't expect them to do, then we could maybe see all-time highs in June. But otherwise, it doesn't look like we're going to get there. But I've also said if not June, then July. I definitely think we will get there. So that's where I'm at right now. I don't know if we're going to get it this month of June, like I've been saying and calling for. But again, I do think that it's coming here very, very soon in July. So my upcoming prediction for the stock market is it's kind of a coin flip right now. It's not great for directional trading. We don't have any clear indication on any of our key metrics we're looking at. If you're looking at Newton, which measures the momentum in the stock market, it did flip yellow just the other day, which just means that the markets aren't trading in above average momentum or below average momentum. They're just kind of chopping around. So for me, I put this little arrow here, but it really could be drawn anyway. I think you could draw it like this. I think you could draw it like this. I think you can even draw it deeper, where there's just not a lot of upside catalyst at this very moment to send us to all-time highs, especially when you're looking seasonally, that it's typically a slow time for the market. So I've just got us here chopping around, kind of coin flip for directional trading. Don't want to really be buying calls and puts here, especially with the VIX at 20 levels still. It's a great opportunity to be using some income plays, in my opinion. We talked about that yesterday morning on our little mini roundtable we did as well. For earnings coming up, we've pretty much got nothing this week. Nothing big on the plate. There are a couple names. Most of them are names I don't trade. I just haven't traded, but nothing big for earnings. When we look at the sector view, the sector breakdown, again, I highlighted June and July here so we can start to look ahead. We are in the back half of June, so we don't want to just close off what happens next, we want to keep an eye on what we expect to move. My top two sectors for a while, communications and infotech, here at the top are typically some of the best sectors to be in upcoming. Tech, I think, is the very best one. I think we're going to see all-time highs across most of the mega cap stocks like Meta, Nvidia, Microsoft, which I think already is at all-time highs right now. I don't think Apple's going to get there based on what I've seen, but
Yeah.
can't give up. Can't give up yet. Seasonally speaking, communication service, infotech are the best sectors for June and July. Healthcare is also a strong one. However, as you'll see here in a moment, it's not a strong one right now. So it's just not a high conviction play, but I will give you a bonus opportunity in the healthcare sector. So for the sectors, this is my ranking system that we use, actually developed by Roger. I trained under Roger. This is a super, super cool way to break down the S&P 500 into the different buckets or industries that make up the S&P 500. So the technology, last class was at the top. It was the strongest sector. Industrials was second. Communications was third, and so on and so forth as far as sector strength. You can see healthcare here, second to last, which is why I said it's just not a high conviction play. Well, if we look week over week, not a lot of movement. So this was last week's class. This week, not a ton of movement. We still have technology, communications, industrials at the top. Just a couple shuffles here, but healthcare did drop to dead last. No good for the healthcare stocks. So for my top sectors this week, I'm just staying the course. We've been trading these for a while. Technology rebounded amazingly after the crash. We've made a lot of money on that. Communications as well. One that I wish I took more advantage of was the industrial sector, but it's definitely a good one to be trading, especially stocks like GE and HWM. Those things have been just amazing, amazing stocks for us. So those are my top three sectors. It's in those sectors where we want to focus on our picks versus taking a whim on a staple stock. Even if it looks good, if the sector doesn't look good, it's not going to be one of those high conviction plays. Now, for a wild card, I do have a wild card for you here, and I'm kind of married to the stock. I love the stock; it's my top holding. One thing that's interesting is financials typically go from a bearish June to a bullish July, seasonally speaking. Now, if we look at financials month to date, it's already made that 1% lower move. So we expected about a 1% drop or just some sort of drop. We've already seen that drop happening. Now, seasonally speaking, just looking at the numbers, it's not going to happen to a T, but that gives us about a 3% seasonal upside over the next few weeks, assuming you buy this dip, if you will. If the financial sector goes up 2% in July and we're already 1% down, that's about 2.9% difference there, or 3% just to round it out. Now, my favorite stock in financials right now typically also drops in June. I asked ChatGPT to do me a breakdown for the last 20 years of the stock and how it seasonally performs in June, July, and August. You can do that too. Super easy. It did in about 30 seconds. So it typically drops in June, which this stock, we did see it break out of our ascending triangle. It dropped in June, hit the 200-day moving average. But let's look at what comes next. Let me just drop these guys down here. This is cool. Little lightning bolt. Looks fun. July and August, this stock is a heater. 1 to 3% in July, 3 to 6% in August. And if we add the dip buying opportunity in there, we're looking about a 10% upside on this stock over the next 6 weeks. Seasonally speaking, how it typically performs, it's an amazing stock that's worked in all sorts of market conditions. In recessions, it's necessarily not necessarily has gone up in every recession, but it's held very steady. In bull markets, it's done well. It's averaged about 14% annualized return over the last 20 years, which is just amazing. And it's boring old progressive, Flo that you see on the commercials on TV. Flo and Jamie with their white little, what are those called? Aprons or something on.
Yeah.
They're awesome. They're hilarious. This stock's have been a really great stock. It's bouncing off the 200-day moving average right now. It is slightly down today, down a quarter point today. Nothing crazy. Seasonally speaking, it's very strong in July and August, some of the best months for it. And also, if I look at my hot sheets here, it is also a seasonal date for us starting on June 24th. It's gone up every year for the last 20 or for the last 10 years, every single year from June 24th for about 18 days, which would be about July 11th or so. So June 24th to July 11th, it's gone up every year for the last 10 years during that time frame. So I really like this stock right now as a bonus, as a wild card play for us. Again, typically I like to trade stocks that focus on these sectors. However, just looking here, a little wild card action, financials turning around, and progression being seasonally strong as well. I think this could be a good one right now. Ron says, I see Progressive has earnings on July 16th. Yeah, they do. However, if you look at historic earnings events, it's not like Nvidia or Apple or Microsoft where it really moves on earnings. It hardly ever moves on earnings. I mean, and I shouldn't say it does not move. It just doesn't make 5% moves. It makes about 1% moves on earnings, typically speaking, Ron. So there's your wild card for you. Now let's get into the nitty gritty. A couple trades I like right now. Well, there are a couple things to say. First, before we jump into the trades, and then Nate, I'm going to ask for your help here. Hopefully, I'm not putting you on the spot. But first, before we dive into the trades, the VIX is higher than typical in a bull market or a market that's near all-time highs. It is about 20 right now on the VIX. It's 1981. I'm looking at my charts right here. That it means options are a little bit more expensive than they normally are. So we really don't like overpaying to begin with. If it's a good opportunity, we might have to pay for those more expensive options. However, right now it's not one of those opportunities where we're saying, uh-oh, it's not like here in April where we're like, buy everything you can because this thing's about to rocket. We're more so looking at this thing might chop around, might stall out a little bit, just get a little cool off period here. So first off, we don't really want to be trading directionally during this market, and we definitely don't want to be overpaying for options during this time either. So in my opinion, I want to use these picks non-directionally. I want to maybe generate some income on them or give us a little bit of buffer room for even if the markets cool off. Hopefully we have some good opportunities. So we'll start here with the top apex signal of the week. Right now, this one for me is Lilly, and I put a couple asterisks up there because it's not one of those five-star high conviction plays that's, look, everything looks perfect and lines up. It is a very strong stock. We have had double apex entries here with the profit target of 942 on Lilly. And also, if you look at the seasonality here, healthcare is one of the bullish seasonal picks for June and July. It's one of the best ones for June and July. The reason why I say it's not one of those all-in high conviction opportunities is because it's just been a lagging sector so far. But with that said, if you like this pick on Lilly, you could go out and buy call options and hope that it just rockets up to here, or you could trade non-directionally, maybe get some options that are down here a little deeper in the money, the ones that are already profitable and slowly becoming more profitable as long as Lilly doesn't end up closing below your strike price. And Nate, do you have anything for us on your end? Or are we still pushing through some kinks on the income machine?
I mean, we're pushing through some kinks, but I can at least show you an example real quick here on on Lilly. Guys, at 2 p.m., I'm doing a live class. Hopefully, I have several more updates pushed through by then, and we'll be humming because, like I said, we kind of melted the servers yesterday with this. But this is the income machines analysis on Lilly.
Might need to. Oh wait, you just did. Okay, can you go back to the scoreboard and just type it in again, or is it?
Yeah, here. I'll go.
Check this out, guys. Just click the scoreboard if you want to.
Let me see if let me do it like this actually, so that I can go back just. So if I go into LLY,
I'm going to cut you off. This is for the VIP members only. You can type in any ticker. That's wild. So you're just going to type in the ticker you want.
So Graham liked Lilly, which is not on my original scoreboard, but I typed in. You can see here it is a 3 out of 5. Actually, a pretty solid stock there. And if you have some extra insight like seasonal and things like that, the income machine's not looking at seasonality. It's looking at some core metrics that I use. And here, it literally, it must be dropping right now. It literally just dropped below.
For some reason, it went to MRK.
The trend. Oh, hold on. That's what I was going to say. It must have just dropped between the two trends there. Here we go. Let's see. There we go. So you can see 3 out of 5 here on LLY. Short-term trend, long-term trend. It's not in the snapback position. It doesn't have weekly momentum right now, but my favorite metric is the stabilizing metric here, and it does meet that criteria. You get a green dot there. And then what you would do is you would go in here and you would choose the income strategy, and it would load that up. That's what brings up these opportunities here. Right now, you can see there's no conservative income opportunity on Lilly. There's very strict standards that it has to meet to get to there. But we do have a steady and an aggressive income approach. If you click this steady one, it's pretty cool here because what you'll see is that Eli Lilly's trading at right about 800 bucks. And check this out, this opportunity. If you can get in now again, I want to be careful with a little bit with the spread details here because we're updating the data right now. So check this one out. See if the 595 600 is around this price 410 because what that will give you is an opportunity. That data is old. It should say 695 700 or it should say 795 800 I think on this one. And this is what the data right now is kind of getting a little wonky here. But what you can see once we get the data all updated here today is that it'll give you all the cool data with the income potential, the ROI metrics, the profit matrix, all that stuff down here. So this is what we will be able to do hopefully in just hours from now once we get the server the rest of the way updated, where it'll plug in these trade opportunities. And you can see there's a couple other stocks that we like here. Oracle, I think we mentioned actually earlier. I actually have a trade on Oracle right now. Netflix has been a beast, and with Netflix, there's actually quite a bit of room for error usually on the Netflix trades, which is another thing that I like. But guys, just give us a couple hours. Crazy how much traffic we ended up getting yesterday on the income machine. Like I said, no big deal to have 1,000 people on the website. The challenge was 1,000 people running very complex option scenarios, grinding through the servers. So keep that in mind, but hopefully by about 11:30 noon today, we'll get another update. And then tomorrow we'll have yet another update with the server upgrade. So if you like LLY, you can get a pretty decent bang for your buck here because LLY is trading, let's see, right now, 801.25. And if you go to that expiration date of July 11th, you can get into this one. Let's see, about 20 bucks under the current price. So, you can get right around a 2.5% below with the 775, 780 call and still have, a 30+% ROI. Pretty good room for error there on LOI. Like Graham, if you just on your screen put in that like 770 level, you're pretty much below the last weekly candle there in terms of room for error. So decent amount of room for error to be wrong with LLY coming back 2.5%, 3% right now and still make a 30% ROI. And that's really what the income machine is designed to do. It's designed to find places where you can get a lot of protection on the trade and still make a pretty good bang for your buck. And like I said, if anyone here does not already have the income machine, we'll cover that here in just a minute, show you all the details on how to get it.
So I'm going to manually plug in here because I don't have the income machine up right now. But if we go further here in the money, guys, July 3rd, we can see if we get filled a little bit wider spread. Again, use a limit order. This would give you 50 bucks of wiggle room, about 7% drop on the stock. And you could still make about 25%, a little over 25%, depending on your fill. I'm going to go ahead and type this up for you guys and post it in the chat. And also, Nate, I forgot to mention at the beginning, if you guys do want to see, if you want all of our resources all in one place, we do have the $1 VIP members portal. We had to charge something to make it happen. And that's why it's $1. Actually, we did a Lilly trade last week here. If you post that in the chat, that way you can get the recordings, slide decks that we go through, trades that we do in here, everything, that trade tracker template, the trainings, scanners, all nice and easy for you in one place. All right, so I'm going to do this one. Here it comes in the chat. This is what I'm going to try and do. It's at 405 now, 408. Again, I said pay no more than $4, but I would probably be willing to pay about, realistically, probably about 425 for this because let's say I get filled at 425. That means we can make 17% even if Lilly falls 7% or so from here. To me, that's a pretty great risk to reward there on Lilly. So even if you get up to, it's at 403 right now. I'll see if I can get filled at 403. Let's do 405. I'll let it sit. I'm not going to rush in. I used a limit order, but if I get filled at 405, there you go, filled at 405. I'm going to make 23% return on investment here. So again, I don't want to trade direction, but I'm going to make 23%. This is a weekly chart, so it's going to skew it a bit. Let me just show you here. I've got my line in the sand here all the way down at 750, 7.3 expiration. So see where my crosshairs are? Lily can come all the way down there by that expiration date. Shareholders are going to lose money. Investors are going to lose money. The board's going to be super upset. I'm going to make 23% ROI. It could go higher, it could go flat, and it can come all the way down to my crosshairs there and pay 23%, which I think is pretty darn good considering that if you get 23% in a year on a stock, you crushed it.
Well, and
I'm
those
gonna
are my
try.
favorite kind of trades. I mean, the fact that you can be defensive and still make, because like I shared before, Graham, I'm sure you remember in the old kind of income days, like when people first started talking about credit spreads, back 10, 12 years ago, they were always going for 3, 4, 5% on a trade to get that kind of protection. And so, one loser blows up 20, 25 winners. And we're able to do the same kind of idea with those really high win rate strategies that have lots of protection, but still find these opportunities that are 18%, 20%, 28%. And it's really become my favorite way to trade. The problem is finding the absolute most optimal dynamic option across millions of combinations.
Yep. No, definitely. And that's why the income machine is so cool because it gives you those automatically. And the VIP is even better because I can type in any ticker I want and get them pulled for me. So that's my top Apex signal of the week. And then next up here, I'm going to give you my hot sheet pick of the week. This is another seasonal play. I look at stocks that have gone up every day during a certain date range over the last decade. If they've gone down one of those years, we don't add them to the sheet. It's only the ones that have gone up year over year over year. And right now, it just so happens that our newest one is on Meta tomorrow, which I love Meta. Progressive is my top stock holding. Meta is number 2. We traded it. I bought it like crazy after the Liberation Day dump. I told you guys to as well. It's gone from 500 to 700 in a matter of about 2 months. Been a rocket. It's been a strong stock here, even with the markets cooling off. And today it's also a seasonal, or tomorrow's in a seasonal entry where it goes up for the next 24 days or about 3 weeks from here, a 4% gain. Now, again, I'm not going to buy premium. Premium's expensive. Markets look like they could probably use a cool off. I'm not going to buy calls here. Hope for the best. I'm not even going to use a wrap order here because there's a chance that it does just kind of chop around. What I'm going to do is something similar to what we did just there on Lily. Nate, is Meta working on the income machine right now, or is it waiting on updates?
We're still trying to get the actual spread data. I mean, it'll give an idea on the scoreboard, which is a 3 out of 5, but to get the actual live spread data, I think we should wait until we're 100% rock solid, because I don't want to give anything that's not officially approved by the income machine.
Yeah. All right. So what I'm gonna do here, same thing on Meta. I'm gonna see what happens. Let me just check. There's no earnings. Yeah, we just went through that. If it drops about 10%, that's 630 here. Let's see what these are worth. So those are already pretty cashed out. Let's see if I move it up here and give us about 50 bucks a buffer. That's not too bad. Now I'm doing this manually. Income machine was designed to do it for you automatically. So here's one where if Meta drops 40 bucks from here, about 6% over the next 2 weeks. Actually, let me add a week here because we have an 18-day hold time. Let me see. I can probably get a little better bang for the buck. Let me just check. So here's one. Meta could drop 10% and still pay you around, what is that, 15% ROI? Yeah, right at 14.9% ROI. If Meta drops as much as 10% over the coming 3 weeks. Now that would be like a conservative play, right, Nate? You would consider that conservative? Meta dropping
Yeah.
10%, paying investors 15%.
Yeah, absolutely. But one of the things too, and we'll talk about this in the 2 p.m. training class for everyone who's in, is the income machine is really good at also checking all the different expiration dates. Because that's one of the things, like for me and you, looking through the options combinations is one thing, but then actually checking all the other expiration dates. What if I go 1 week longer? What if I go 1 week shorter? And then comparing them all together is, way beyond the scope of what we can do on a given trade. So what you might find on the income machine is, yeah, you can make 14% on, a 12-day trade, but what if you could make 17% on a 3-week trade?
Mhm.
Well, with a stock like Meta that tends to go up more than it goes down, that 3 weeks can actually be a really nice buffer to actually increase your win rate. I got some messages from people yesterday, and this is one of the big things I want to talk about at 2 p.m., who said, oh, I don't like holding it for longer. I don't want to hold it for 4 weeks because that's more time for it to go down. And my thinking is, well, that's also more time for it to go up. And if you're trading good trending stocks that tend to go up more than they tend to go down, you can have the crazy scenario like we saw in Tesla, where it did flush 10% on the underlying stock. But a week later, it had rebounded 5%, and almost any other strategy that would take a loss on that 10% just by actually giving it the time turned it back into a winner, because we're trading good stocks that tend to go up more than they go down. So a long-winded answer to say, yeah, absolutely, great conservative method. And one of the other things you'll see is how to bake time into that equation as well automatically with the income machine.
Yeah. So what I'm going to do here, guys, I'm going to do one of the more aggressive plays. And I say aggressive, that doesn't mean we're really trading like crazy out of the money or anything. The aggressive is just a little closer to the money. So I'm going to play to a trade here where Meta can fall as much as 3%, which I don't think Meta is going to fall over the next 3 weeks. I think we have a lot of things going for us. Seasonally, it's a great one. Technology is our strongest, or communications, one of our strongest sectors. And first and second half of July are mega heater month or periods in the stock market. So I do think it's going to go higher. However, let's say I'm just concerned about the chop and overall market. What I'm going to do is I'm going to use that 11th of July expiration. Let me post here in the chat. Right now it's at 360 net debit, and this will pay me about 40% over the next few weeks, even if Meta drops 3%. Filled right away at 360, so you can probably get a little bit better.
Oh, that's nice fill on that, I think.
Yeah. So again, about 40% return on investment, even if Meta ends up closing below these crosshairs here. So that's one of the more aggressive plays in the income machine. But as you can see, it's not actually aggressive. You can still make money even if the stock drops, even if it doesn't seasonally do what it normally does, even if communications doesn't stay hot and everything is off base on our analysis. Still pay 40%, which again, when you factor in the fact that most stocks don't gain 40% in a year, I think that's pretty good bang for the buck there. So that's what I got for this week for the overall market analysis. Again, not a lot of direction here, not a lot of bias in the markets. Probably some chop, maybe some consolidation. Newton momentum is neutral now in the S&P. So I just think it's a good time to be playing a little bit more conservative, a little bit more of those income approaches, especially while options are still expensive.
Yeah.
So let me answer some questions here. And Nate, do you want to pull up the income machine now and we can take folks through? I know we had a lot of questions here. People missed it yesterday. So we'll
Yeah,
walk
well,
through
and
that now.
by the way, if you guys are not, if you don't have access to the income machine right now, if you don't already have access to it, give me a quick yes in the chat right now. I just want to know who all we're talking to, who has not yet taken the at least the free opportunity to get access to the income machine. Shoot me a yes in the chat because we have a ton of people still in here today, and obviously I'm going to be talking about this,